Hello, Mavericks. How's it going? This is Rob. And sorry, you've got me solo today. Darren is out of town and Corey couldn't join me, so you're just going to have to deal with my analysis here. All right, let's start off with last week. So last week, we went into the week at a mildly bullish reading, and we had a really nice day on Monday, and everything looked really good to go for a rally throughout the week. We heard from several Fed governors, specifically Laura Brainerd, who is one of the most dovish members on the Fed. She came out and she was like, hey, we need to do more and we need to do it faster. Really surprised the market. And then the next day we got the FOMC minutes that showed even more aggressive movement than the market was priced in. So after a good up day on Monday, we had some news-driven selling on Tuesday and Thursday that was pretty intense. And then we kind of settled out on Thursday and Friday, but didn't get a great bounce. And we'll take a look at all these charts here in a second, but we do have the volatility index is back above 20 up to 22. The big news last week was the bond market. We had the biggest move in the bond market since March of 2020. And remember how crazy March of 2020 was. We saw the 10-year bond go from 2.3 to 2.7. That's a monster move. The yield curve is still inverted. Whenever you have one market move so big, remember there's spider webs attached to everything. And when something moves, it pulls everything else along with it. So what we got was tech stocks go down, the US dollar goes up, cryptocurrencies tank. All of these things happened because of interest rates. This is the story going forward. And I think we're going to have to get used to this story even more going forward. And so what happened specifically this week is what's likely going to continue to happen until we get to the point where the Fed is not as aggressive. So if you don't know exactly what that is, US dollar higher, tech stocks lower, regular stocks doing just fine, interest rates higher, cryptocurrencies lower. It's one of those things that this is what happens when you have all those strings being pulled. We did not have a lot of economic news. We had ISM services basically came in as expected. So let's take a look at these charts and let's take a look at what really happened here this week. So we had S&P down 1.3%, Nasdaq down 3.9%. But you could see the Dow actually was fairly flat. The Russell was fairly flat. And we had oil trade down to the $98 a barrel. This week, we got a lot of news that countries are releasing their reserves. And so it's kind of flooding the market with some oil at the moment. It's keeping a little bit of a lid on everything. But if we want to take a look at the S&P, what I want to really focus on was Monday. So we had a nice hammer on Friday. We had a nice confirmation on Monday. This is typically, take a look back here. We got exactly this, a hammer followed by a confirmation candle. And it was a really nice signal. It was a really nice signal to be long. Here we got another one, hammer. This one only lasted a little bit before it fizzled out. Whenever you follow technical analysis, you have to understand that when you see a hammer candle with a confirmation candle, it means it's going to work out most of the time. And sometimes it doesn't. We got some news on Tuesday, and you can see Tuesday was a nasty day. We had a down move on Tuesday and gap down on Wednesday. But take a look at Wednesday. We actually held. Thursday, there was some buying that came in. Friday, at one point, it was looking like it was going to be decent, and then we settled back down to basically close flat, slightly down. So here we are just hanging out at these moving averages. We do not have a really good bounce off of these moving averages. We've got some nice long lower shadows, so it shows that the market's trying to hold in there. But we like to see, this kind of price action off of these levels. And we're just not seeing that. I have to say that it is above the 20. It's above the 50. So if I have to make a call on technicals, the technicals still say that it's more up than down, but I can't really say I have a lot of conviction on that. We come over here to the Nasdaq and we can see the Nasdaq is actually looking a lot worse. So where the S&P held this 20-period moving average, the Nasdaq did not hold it. And on Friday, we closed down at our lows, meaning we're likely going to get some more selling early next week. And once it breaks that level, it's done. You know, we've basically taken this rally. We've broken below the 50% line, and it's telling us that this is done. So I'm looking at the S&P and I'm thinking, okay, it looks like it wants to try to hold on. I look at the Nasdaq and it's looking like it's going to break. If the Nasdaq breaks, it's probably going to take the S&P with it. If the S&P holds, it's going to take the Nasdaq up with it. What are the odds of that? I'm going to flip a coin, 50-50. And here's the great thing. I don't know. Now, look, we never know, but we make educated guesses and we say, where's the risk reward in this? At this point, I don't feel like there is an edge to being aggressively long or aggressively short. I think the right place to be is right in the middle. I could easily see some choppy action for the next couple weeks. More strength in the S&P, like normal stocks, and more weakness in the Nasdaq technology and speculative things. I think that's where we're probably going to be for the next week before we get a clear move one way or the other. Here's the VIX. You can see we bounce back up, but we're not into the crazy 28, 30, 32 area where we start to see some panic. So this week, we are right at moving averages. Like I said, typically this is where you say, hey, this is where we pull back to the 20-day moving average. It's sloping higher. You go ahead and get more long. I can't say it this time because we're seeing NASDAQ looking pretty weak. S&P looking okay, NASDAQ looking pretty weak. I think the ultimate line in the sand is at 44.26 on the SPX. If the SPX breaks its 50-day moving average, by default, for me in my trading system, I have to be net short. S&P below the 50-day moving average means I must be net short. So that to me is the line in the sand there for the SPX. I think we get some sideways choppy action. I think we get one big up day, one big down day, a couple days just chopping back and forth. I could easily see us end the week with a lot of crazy volatility and really nothing to show for it. We do have some economic reports this week that will make a difference. We have CPI. This thing has been red hot lately, looking to moderate. So plus 0.5 is a moderation, sadly. We have 8% year over year. That's a moderation, sadly. But we'll see what happens. If it comes out even hotter than this, then again, it's going to spike interest rates again. It's going to cause the same thing we saw at the end of this week. Wednesday PPI is not going to be as important. Thursday retail sales and import price index, I think you can basically ignore those as well. The CPI is going to be the story this week. When we take a look at where we stand here, we have to back down from a +2 to a +1. We have to. So I think the market is still telling you to be more bullish than bearish, but not much. Like I said, I don't like how weak and anemic this was. This should have been met with much more buying, and it was not. I've got a 0 for the week, but I could easily see a fairly large range this week. And if we start off the week on a selling note, I could see us ending with an up run. Vice versa, if we run in the first day or two, I could easily see us selling off for the rest of the week. I don't think there's going to be a clear sign of where this market's going until probably the end of next week. Now remember, this week is a shortened holiday week. Good Friday. Look, I'm so happy that I finally caught Good Friday. Every year in the past, Good Friday has always surprised me because the markets are always closed on Mondays, except for Good Friday, and it always surprises me. This time, it is a monthly options expiration as well. So this is a pretty big deal that we have monthly options expiring on Thursday this week. So I think, again, we just have to pull back our bullishness a little bit. I think you want to be as close to net zero as possible in your delta, not leaning too far one way or the other. Look, we are seeing a lot of volatility, so a short theta trade is also a fairly difficult trade here. I personally like cash. Personally like cash better than positions, to be honest with you here. Let this settle out over the next couple of days. We'll figure out what's going on. We'll be able to take much better positions after this. Now, here's the nice thing. The broad market is murky. It's murky. Here's the great thing. The sectors are not murky at all. I actually was just hanging out with someone last night. They know what I do, and they said, hey, let me ask you for some advice on my investing. And I said, okay. And basically I said, you want to buy all the stuff that inflation helps. You want to buy food stocks. You want to buy energy. You want to buy materials. You want to buy all that stuff. And you don't want to be in technology or financials. And they said, oh, okay. Look, it's a broad brush to paint. This is investing, not trading. But let's see if that is where the money is going right now. And you can see that energy had a great week this week. Materials were up. Financials are actually up a little bit. Healthcare up. Utilities up. What didn't do well? Technology. Both in communication services and technology, they were really weak. Consumer was weak as well. This is what we're likely going to see for the next couple months. I think we get a bifurcated market where Dow and S&P like stocks do better than Nasdaq stocks. Now, when I say do better, I mean probably don't go down all that much or go up a little bit. I do think that the tech stuff is in trouble. It was in trouble. We had that big, massive, 18, 20% rally in the Nasdaq. I think we're very likely to give that up over the next couple months. Again, I'm waiting to see that 50-day moving average is my line in the sand. Until that breaks, this is just a theory. Let's take a look at utilities. Utilities, the money is just pouring in here. Look, if this was any other sector, I'd go +3. The fact that utilities is such a slow mover, it literally can't be a +3. But this is about as strong as it gets. Is it overextended? Yes, it is. Is it likely to pull back? Absolutely. But if you give yourself enough time, is this the right place to be? It is. +2 on utilities. Here's communication services. It's got a little bit of a downgrade, looking like it had some signs of life, going up above that 20-period moving average, and it gave it all up. Now, look, it didn't go crashing below the 50-period moving average, so I've got it at a 0. If this thing moves lower this week, this will get a downgrade to a shortable sector. In real estate, I really like the price action in real estate. So we've got this run up, and then we've got this ascending flag. These used to be one of my hardest chart setups to trade because I was still thinking, oh, it's already run. I wanted to get something cheap, like on a pullback. And this is it already ran big, and now it's just keeps floating up. How can I possibly chase this at this point? These are the strongest patterns. It's telling you that they don't care about that big jump we had in March. They're still buying. There's still money coming into the sector. So real estate for me is a +2. It's a good sector to be long. Industrials really just tried to break out. It really tried, and it just couldn't. This is likely being hurt by the strong US dollar. I think the utility sector does over half of its revenues overseas. This is just going to hurt it. And you can see here, we've dropped down below the 50-day moving average pretty cleanly and bounced off it twice. So I think you can look for shorts in the industrial sector as well. Coming over to healthcare, it is red hot +3. Higher highs, higher lows is everything you want to see. Had a big week this week. We're going to probably pull back, which is fine. I think this is where you want to be, looking for long entries in healthcare. Financials, overall, it's just a big old flat. I'm not going anywhere. We have the 2 little moments where it looked like, 3 little moments where it looked like it was going to go somewhere, but it's not. This is just a -1 at the moment for me. Likely we're going to get a little bounce back up in here. To me, this is just, it's not going anywhere. In consumer, same thing. We tried to put in some nice new moves. This chart looks identical to the S&P. Identical. So I think whatever happens to the S&P is going to happen to this. And I'm at a 0 on the S&P. So I think you got to take a look at a 0 on consumer. Technology looks bad. We broke below these moving averages. We closed on our low on Friday. To me, it looks like technology does want to go lower. I've got a -1 at the moment. This could easily turn into a -2 with a little bit more selling. Finishing up with materials and energy. Materials had a pullback this week, and it was met with buying. And here's what I love. It was met with buying, not just on Thursday, which was an up day in the market, but on Friday. There was quite a bit of buying on Friday, even though the market was overall more weak than strong. This is telling me, okay, I can start to look again at some material stocks off of this nice little pullback from that rally we had in March, +2. And energy, we liked energy last week. We like it even better this week. This is just a really nice ascending triangle pattern. We got a breakout on Friday. This thing looks like it wants to run again. The great thing is, it's been a month. We've been in this ascending triangle for over a month. We just broke out. That tells us we could have at least a couple weeks of a run in energy. And the thing I liked best, it was up big in a sideways to down market on Friday. It's telling you that's where the money's going. So when we take a look at everything, remember I said the market isn't too clear. The sectors are pretty clear to me. I think you can make money on both sides. I think you can make money. Now, this is where we were last week. Let's take a look at the movement. Industrials got downgraded. Healthcare got upgraded. Financials slid down. Consumer lost a little bit. Technology moved. Energy increased. Take a look at the bifurcation on this. The haves and the have-nots. You got the haves on the right. Materials, energy, real estate, utilities, healthcare. They look fantastic. They're all at a +2 or to +3. Technology, financials, industrials, consumer, communication services, they're all down at a 0 to a -1. I think you can find some really good trades in both. I think you want to be long the normal stuff that's going to be helped by inflation, and you want to be short the things that are going to be hurt by inflation. So let's go ahead and jump into looking at some possible trades in each sector. First, I'm going to start out in the real estate sector. We've got Iron Mountain. All right, now Iron Mountain is a really nice high base. Iron Mountain is a company that used to be a tech stock until they redid all the sectors. And this was actually data storage. Now, I'm not talking about cloud data storage. I'm talking about literal digging into a mountain and storing things storage. This is what Iron Mountain does. They are actually where a lot of data is stored, but I'm talking about like CDs and tapes and all that stuff and hard drives. So Iron Mountain's been doing very well, as you can see. Had a huge run up in March. And we love high bases because after this huge run, no one is selling. No one's selling. It's just taking a break, just taking a breather. We are expecting this to continue to move sideways as this moving average comes up to start to put some pressure on it. So the setup I like is right here, is the diagonal call spread. So basically we're going to be selling an at the money diagonal call spread. We're going to collect that premium for this week. I think it was about 30 cents the last time I looked. We're going to collect that premium. We're going to look at it again on Thursday and say, okay, do we want to hold the May 50 calls? Do we want to sell the May 50 calls? Or do we want to turn this into a vertical spread where we do like the May 50 and 60s? So we'll sell the 60s to make it into a vertical spread. We'll have to wait and see on Friday to see, or Thursday when this thing holds up. In comm services. Comm services is a weak sector. I want to be more short than long here. Here we have Twilio. So we had that big rally off that bottom, 125 up to about, boy, what is that? Let's see where that is. 125 up to 175. That's a monster move. That's a 33% move. And you can see we've now given back more than half of it, telling us that we're likely to come back all the way down to 127, 128. I am not going to be that aggressive here because I'm not that aggressive in the market. If the market was at a -2, I would be much more aggressive. The fact that we're still at a very weak +1 on my shorts, I'm going to play less aggressive. So I'm looking at this 140, 145 bear call spread. Now, again, that's just for 1 week. That means it has to move next week. If you want to give yourself more time, I like these and maybe sell some options against it while it's falling. Healthcare is a red hot sector. It looks fantastic. A lot of things have run quite a bit, and I wanted to find something that was a reasonable entry. Now, this is Medtronic. Medtronic is a very boring stock. This thing is not going to move all that quickly, which is what I really like. Whenever I'm worried about chasing a sector where it's red hot and all the hottest stuff has already gone up 10, 15, 20%, I like to go down to the more boring stuff and just find something that is just going to plug along and continue to move higher. This is Medtronic. So I like the 115. I like that for a target, 115 right up here. So what I want to do is I want to be long the May 110, short this Friday's 115, collect that premium. After that, we will reevaluate the trade to see what we want to do. That is Medtronic in healthcare. In the industrial sector. Now, I did the industrial sector at -1, but I came across this chart and I thought, man, that is a good looking chart. Everything I like to see in the chart here is showing me this. And we got a nice update on Friday on the down tape. So for me, John Deere, I'm looking at a bull pullback here. With the market where it is, I can't get a target all the way up here at 440. I think that is just way too optimistic. I'm looking at something like a 420, 430, somewhere in this area. And I think this is where you want to be. You could either be vertical or diagonal here, but I think that is the range you want to be, 420 to 430 on Deere. The financials are a weak sector. Last week we gave you MTG. It had a really nice fall last week. This week we've got Lending Club. Lending Club is it's a non-bank lender, and they don't follow the rules that banks do, and they're allowed to do a lot of things, and they're not regulated. They have been the ones that have been giving out the risky loans. There's no question that this is where the risk is as far as loans go. If we go into recession, the banks don't have a lot of the risk. These off-bank lenders do. And you can see people are feeling that this thing has some trouble here. So I like this one. We've got this low base, maybe a little bear rally we had back here. And you can see we're coming right back down to support. I've got two trades here. Super short term, the 14-15 bear call spread. Probably going to get 45 cents, risking 55 cents for 4 days. That's it. So it just has to move down 26 cents. Or I can go out even further and be very aggressive and say, hey, I think this thing's going to make it down to 10, which for me is the target, is 10. I think this thing is going to see a significant loss, especially if the market goes any lower. I think you take a look at that 11-15 bear call spread. You're probably going to get, I'm going to guess, $2.50 out of there, $2.70 maybe, give you $1.30 of risk and a nice upside if it does fall. That is Lending Club, LC, in financials. Consumer was a sector that pulled back a little bit, but still looked okay. Here we've got Twinkies. As we all know, actually, maybe we don't all know, but Hostess went bankrupt a few years ago, and someone came in and bought the assets of Hostess and said, hey, we're going to take it and run. This is where you want to be long. Food. Food is doing really well. There is fear, and real fear, of global food shortages due to the Ukraine-Russia war. I heard like 25% of all the calories in the world are created in those two countries. And it's really going to possibly be a real crisis that we have in our world. Food is doing really well here. The money is going into it. It's performing well. The charts look great. So here's Twinkies. Bull pullback, had a nice pullback here. Thing I do liked is we had up days on the bad days. Up days on Tuesday and Wednesday, up day on Thursday, and an up day on Friday. Now, yes, I am going to complain about Friday's candle. I would have loved to see a much stronger candle than this one, but based on my rules, this is a confirmation. This is a trigger. We closed above yesterday's high. This is a trigger to me. So the question is, how do you play it? I like the diagonal call spread. So the 22.50. You're basically selling at the money. If this thing runs, you're going to make like 10% tops. In 4 days, you're going to take it down and move on to the next one. If it hangs out around that 22.50, you're going to collect that premium, and then you've got the long calls for May to decide what to do with. To me, tech looks horrible. So there's lots of stuff to choose. I chose Spotify here. No, not Spotify, Shopify. Bear rally. We rallied up here from the 550 area all the way up to 800. Stayed there for a little bit, and now we're coming off. It's telling me that this is likely to be retested. The market is not that weak. So I definitely am not looking. I am definitely not looking for anything with that target. What I do like is just at the money, 600, 610. That's a wimpy trade. If it goes down at all next week, you're going to make a nice little chunk for 4 days. If you want to go out a little further, I do like just the straight puts on this. They're going to be pricey. And for many of you, it's going to be priced out of what you can do with the size of your account based on position sizing rules. But if that's the case, just do a vertical. Just do a vertical. You could take a look at a 590, 610 vertical, a 590, 600 vertical. Either one would be just fine. Materials are looking good. I've got a +2 on them. And you can see Corteva. We played this one off of this breakout. Had a really nice run off that. Waiting for a pullback. We got our pullback. And you can see we got our nice confirmation on Friday here. Question is, where's the target? I like the 60 short term. I'm really liking these diagonals here. So the May 20th, 55, sell this week 60. Right at the money. If it takes off and runs, hey, you made probably 15% on this one. Take it down on Thursday. Have a great weekend. If it hangs out around this area, it's going to be great because you're going to be profitable because you brought in that capital. If it turns around, as always, we have our plan, our abandon and adjust point. We'll bail on that. But this one, I like this going into May. I love these diagonal call spreads that I can build today, wait for a couple of days, and then say, wow, I really like these long calls into May because I think it could potentially go to 70. I think that is what you want to be doing here on some of these stocks. Short-term diagonal call spreads. And in energy looks fantastic. I wanted to find something that I didn't feel like I was really chasing after it. And here's, again, one of my favorite patterns. High and tight base. We run up. We just don't give up. We don't give up a dime of that big run from 24 to 30. That is a big run, 25% run. And you can see people still bought it anyway on Friday. A nice breakout to the upside. This thing has some juice. This thing has some volatility. As you can see, this thing will move $4, $5, $6, which is, that's like a 20% move very easily on this one. So we always want to play these with verticals. Verticals and maybe a diagonal, but I like the vertical better. I just like the 33, 36 going out to May. I think that's going to be the call here on Antero Resources. If there's any trades you want to share with the rest of the group, please jump onto the Maverick Trading blog. Go in, log in, start up a conversation, join a conversation that's already happening. We always love to get our traders talking to each other as much as possible. We are meeting twice this week live. We're going to be meeting Wednesday as usual for the midweek update. And Thursday, we're going to be talking about the SPY versus SPX, specifically talking about the options on them. We're going to be talking about how they're different, and they are different. And people that don't understand this, they get themselves in a little bit of trouble trading SPX because they don't understand the multiplier and what they're really trading. So we're going to do a session on that. Corey's going to take you through that since Corey is the smartest guy I know about SPX options. So he'll take you through that. And then as always, we'll do this again next week and get you ready for the week after. Expect choppy trading. I think it's a tough call here on whether the market's going up or down. Give me a few days. I'll be much more clear on where the market is going, because right here, right now, I don't think anyone can do anything other than take a wild guess. We need some more data. We need some more candles to tell us what's likely going on. Expect choppy trading. If that's the case, we want to either be very short term or longer term. So maybe even looking out to May, like, oh, let me go all the way out to May, 5 weeks away to set my trades so I can just sit through some volatility over the next week or two. Or I'm going to make my plays for Thursday, very short term, and take it all down and be in cash over the weekend. I think that's what you have to look at right now in these market conditions. Hopefully you have a great weekend. Stay safe, everyone, and we'll see you next week. Goodbye.